So this is probably one of the biggest mistakes traders make, if not the biggest, right? So just look at this chart for a second. We've done all the markings. The lines might be faint, so I'll put up an image anyway. But basically, traders seem to think that they can forecast the next 5, 6, 7 moves on any chart, right? Here we're on the daily. I've drawn a mock line to say we're going to go higher, higher, and then drop lower, right? Now, the problem with this is it's just bullshit, right? The number one thing you need to be doing is essentially predicting one move to another move. Okay, so especially when it comes to the weekly, the daily, the monthly, you want to make sure that you're just focusing on the next move in price, because what you don't understand is every time we hit a higher time frame liquidity pool or an FVG, we have the ability to turn around. Even if we're in a buy program, even if we're in a sell program, we're judging our whole basis off, right, the idea that we're in a buy or sell program on the higher time frame. However, you need to take into account at all higher time frame levels what are the key possibilities that happen, right? For example, let's say we are moving bullish. Okay, let's say this is the monthly or the daily chart. Once we reach a daily FVG here, for example, you don't know how far this retracement is going to lead. Okay, we'd like to say it's to the next FVG, right? But you don't know whether we'd want to go a bit lower, attack this low, and then, for example, continue higher and carry on from a total soup standpoint. You don't know if we're going to get a displacement from this level. So when we're on the higher time frame, you need to just focus on the next move possible. So I'll break it down really simply. I know a lot of you guys look at, like, let's say, I don't really like this idea, but internal range to external range, because people oversimplify this. Like, people say, like, oh, once we've tapped internal, the only thing we can do is go to external. That's wrong. Okay, when we tap internal liquidity, right, or some sort of FVG, you need to understand first of all how we actually respecting this level. Are the bodies respecting it? Are we switching on a lower time frame from a sell to a buy program, right? On, let's say this is the daily chart, the larger parent leg. Are we, okay, shifting on the H4 like this? Are we switching program? Are we now aligned on the intraday and the daily and the weekly? Okay. Number two is understanding how quick and how much time we're actually spending inside of these POIs. So, for example, are we consolidating in them? Okay, are we building liquidity for a more aggressive move, or are we coming in with a more V-shaped recovery into this POI? These are all factors that you need to weigh up and factor in. Okay, because like I said, we don't know. Just because we've tapped internal range liquidity, it does not mean we're going to external range now. You need to wait for the lower time frame confirmation. We need to see how we're respecting the POIs. For example, there could be two POIs here, right? So which one is internal range liquidity now? See what I mean? It's not as simple as, oh, we're in a buy program, we've hit internal liquidity, now let's turn around. What you'll notice with all the moves that I call out, if you're following along with all my weekly outlooks that I post for free in the Discord, you'll always notice I'm just going for the next move. Okay, so like, for example, previous week's high, previous week's low, the next internal FEG. Once we've hit that level, then I'm slowing down and waiting for price inside of that level. I think that's a big key lesson, is that no one wants to wait. No one wants to slow down and understand where we are in price and how we're interacting with each POI. You have to give each POI a chance to show itself, whether we're respecting it with the wicks and the bodies, whether we're actually closing through that level and we want to go deeper. Okay, these are all things that we have to weigh out and judge. So let's go ahead. Let me show you an example in oil. Every single one of my trades already includes this idea, but I'm just going to do a top down as I always do and show you exactly what I'm looking for, which array I was looking for. And this is a move that I called inside of the free weekly outlook that I post in my Discord. Building on this idea of a sort of one move type bias, you can see here how on CL that we'd taken out liquidity, we'd shifted from sell to buy program, and I'm just looking for the next target in price. I'm not going crazy. I'm not saying like, oh, we're going to reject here, then reject away, or we're going to go through here and go up here. It's like, you need to give this FEG a chance to see what we want to do inside of it. Okay, so I already know that we've moved from liquidity, and that's the next POI, as in next area where I want to see price gravitate to, because I understand that the market, of course, only does two things: repricing to FEG or FEGs, or taking out some sort of liquidity. So I know after we've taken liquidity and we're in buy side, or so we're in a buy program, that it's very, 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 very likely that we're going to want to go ahead and reach for this FEG, right? I know some of you guys say, oh, this is just internal range to external range. Not really, right? I mean, sorry, external range to internal range. I think I said that right. But yes, it is fundamentally. But the point is, then a lot of you guys would start saying, well, oh, now we've tapped this, now it's internal range to external range. And it's like, no, like you can't go that far ahead. You need to see, do we even respect this level, right? And you would have seen me talk about that in the weekly review specifically. So I wanted to see the next daily candle expand to the upside to this FEG. And even if, look, if you would have gone off the internal range to external range ideology, right, you guys would have stopped trading here, okay, because we'd already tapped the weekly FEG. Yeah, so what you got to understand is there is more to the market than just internal range to external range, right? There's a lot more. So anyway, we have the shift on the daily. We want to see the next daily power of 3 expand, and you guys know that's part of my model. So let's play this along. Let's see what happens. So in a buy program, of course, we want to see bullish arrays being respected. So let's put this order block on here. And let's see what happens. I just want to play some candles. So we end up taking out the high, which is completely fine. That was during London. We go ahead and we run lower. And then at this level here, right, which it basically looks like we're reacting off nothing. If you go over to a correlating asset, so in this case Brent oil, you'll see that we have some SMT there. Okay, so at this low right here, one asset is dropping or failing to take out this low. However, one asset is taking out the low, and you can match these times up yourself. So anyway, we have SMT there inside of a higher time frame PD rate where we are looking to be bullish. Or you could draw on this FEG if you really wanted to. I mean, it's already been tapped. It's not really that relevant. Okay, so on the 15-minute, this is a very specific cycle that I actually haven't mentioned, and that's how or why I approach it in this set way that I'm going to show you. But I'm not going to go into too much detail about that. So we have Asia, Asia consolidation, London that takes the high and expands lower. We then, get a 15-minute CSD, slash market structure shift above here. Now, what actually happens with this one is we get an OTE retracement, okay? So we end up retracing fairly deep back into an OTE pocket, and we end up filling the lowest FEG possible, right? And there's a ton of reasons behind that. We then, retrace back above. This back end area gets confirmed via a shift on the 15-minute with this IFEG, right? Once we've actually confirmed that, you can literally go ahead and enter inside of that level, and this is off like a back end style trade. You can see on the 5-minute and even on the M1 how we've built liquidity. That clear shift from sell to buy program. I'm just giving you guys a bit more detail on the trade. And yeah, you can literally just go ahead and enter off there, off the IFEG. Let's just say you don't wait for the retag, and you put the entry at the SL at the fill, and it's being weird, but yeah, as the what's that 4R roughly probably. So we come in, look at the accuracy of this. We literally just tap the upper end of this FEG. That's why my SL wasn't here, it was here. And yeah, we go ahead and run to target very nicely. Okay, so the point is like once we get to that level, all of you guys, or not all of you guys, but a lot of people would say to me, oh well, now it's internal range to external range, right? And we have the beauty of me actually showing you exactly what happened inside of this level is we just traded through it, right? So obviously I'm recording this video like a week later. And you can see, look, you have to give price a chance to interact with this level, because if you were the guy looking for shorts as soon as we got into that level, whether it would be here or here or here or here, it's not really going anywhere, right? We want to wait, we want to see. Do we respect this via the bodies? Do we shift on the daily? Then, for example, let's say we did get a shift, right? A CSD, maybe even a closure past this. Then what's my next target? Boom, right? That's my next target right there. Then once we get to that level, what do? We wait. We always wait. Once we can confirm one move to one level, we get that delivery. Obviously, we try and take that trade and we wait. We slow down. Okay. Even once price took out this sell side low, it's like give price the chance. We might not react. We might just fly through it. For example, this low, yeah. You might have been the guy thinking, yeah, you know what? We've just taken out sell side, or even this sell side, right? And it's like, oh, now I want to anticipate a really big move back into this daily FEG. You'd have been wrong, okay? Just because I've shown one example where sell side has gone and reached for an internal FEG does not mean now internal range to external range and external range to internal range is like 100% right. The point is you give price time, you let it develop, and you look to see how price actually interacts at each level. You're not trying to predict the market 4 or 5 steps ahead. Just look at the next step, the next one step, and I guarantee it'll make a big difference in your trading. So anyways, hope you guys enjoyed that video, and drop some comments down if this is something that maybe you didn't realize that you do, but you now realize obviously that you need to get rid of this sort of bad habit. And yeah, just let me know how you guys get on with that. Hope you guys enjoy the video, and I'll see you on the next one.